Hello everyone, it is my first video after 3 years break. I hope it will be interesting and we will research some stocks. I think we will start from biggest stocks from S&P 500 and actually I need some time to do it. NVDA Corporation. I really don't like NVIDIA because it is extremely overvalued stock from my point of view. Average price to sales 24.67. Average price to gross profit 37 and average price to earning 73. And also we have a growth rate around 73% for the last year. And actually my model not really working on this stock because it is just not a regular stock. Also, I will show this stock on Guru Focus because I think it is easier for understanding. Forecast. If you have any comments or questions, just leave it in the comment section. I will try to read everything. Here you can see analyst estimate revenue for January 2027, 2028, 2029, and you can see that they will grow absolutely with absolutely insane numbers, like 36% per year. And if you have this amount of growth and this amount of net margin over 55%, and it looks like from analyst view that they will grow their EPS even faster than revenue. I think that these predictions are not really accurate, and if some guys from China will do something similar or just better that NVIDIA produce, and this revenue will blow out, and I think you will see huge correction in NVIDIA Corporation, because it is possible to trade on price to sales 25 if you're growing like this, but I actually don't believe that in 2028 we will see $562 billion in revenue. I think it is not possible, and that is why I just pass the stock. I don't invest in it. And I think it is better to draw some levels where you can actually buy it, but for NVIDIA I think it is not just working. I will just pass it. These numbers 3.5, 541 and 11.1 not real numbers, because they also traded on other exchanges and they have preferred stocks. That is why it is not accurate, but anyway we have this level, and I actually will think to buy this stock only with a huge discount, and I think it will be like 180 or somewhere here, just to check the stock again, because right now it looks overvalued. But it was possible to buy the stock somewhere here, or maybe somewhere in 2025 April. Significantly overvalued. I think the same. 15% growth rate, not really huge, and net margin 32. I think cheap valuation for this stock will be with 15% growth. I have this chart. It is for when you grow rate 10% and 20%. We are somewhere in the middle. We can just discount like maybe 10% or something like this from price to sales, and I think it will be like okay to buy with price to sales like 9, plus we have to cut it maybe to 8, because they're growing 15%, not 20. Definitely with price to sales like 10, maybe we can wait for like 20% discount for the price, and it will be $250. It is interesting because I thought that 10.68. Definitely interesting. I thought it is not so cheap. Oh. We have first question. It is written in Russian. What do you think about software companies? And I think we will actually researching Alphabet. It is a software company from my point of view, but I think that some of them are awesome, like into it, and I hope we will see it in the future. But right now we're coming from the biggest by market cap to the lowest, and I think Google, it looks like it can be interesting because I messed up with price to sales. I thought that number not accurate, but even with 9, I think this just this model not actually accurate, and it is set for me. We will replicate something similar with Guru Focus, and I think everything is okay, because if we will draw price to sales on a chart, you can see that median price to sales 6.3, and actually you can just buy low and sell high. Team ticker. Okay, team ticker. Team. Just to finish with Alphabet, you can see the same with price to earning, and I think it is just overvalued right now. You have to buy like lower 20 and hope that everything will be okay with Google. And now we have Team Atlassian. Actually, I was never able to research Atlassian, and you can see that it is marked like a possible value trap. I think twice. I think that they just build the soft and sell it to someone. Actually, we can read about them somewhere here. Produce software that helps teams work together more efficiently and effectively. The company provides project planning and management software, collaboration tools, and IT help desk solutions. From my point of view, all of this stuff are not really interesting, and you can wipe code the same easily. I can be wrong, but this is how I see it. The company operates in 4 segments: subscriptions, license and cloud agreements, maintenance, blah blah blah, support, blah blah blah, perpetual license, upfront sales for identity usage of the software, and other. Atlassian Marketplace. It is hard to predict Atlassian, but if we can see some drawdown in revenue, that will be definitely a sign to sell the stock, and operating cash flow, free cash flow. I think maybe it is just about quarters, but I don't know how you can invest in these market conditions in companies with negative income, and actually ROIC minus WACC in negative zone too. I don't think that it is a good idea to buy something like this, but if we're talking about software companies, and maybe it will be easier to check. On Guru Focus, it is definitely not a buy if we will check the same for Atlassian. In TradingView it is 10, 13 and minus 80, okay, 50 or something like this. We have to I think it is not investable, or you have to understand why companies can't reproduce something like they offer. I just don't want to dig in it because people don't believe in this stock. Why should I? Because minus 80% and I will just pass it. Next one, it is Apple, and I think it is on a fair value or something close to fair value. Average 7.39, 17 and 30, with growth rate around 15%. And actually it has to draw down for 15% to be at a fair value, and minus 40% actually to research the stock, and I will do it somewhere after 180, and I think it's time to make some spreadsheet just to track it. It will be something like this. I will add prices from Yahoo Finance here, and I will just come back to Apple when it will be cheap, or maybe in 1 year or something like this, because actually I don't want to buy something with price to sales 8.7 and price to earning 32 with not really a huge amount of growth rate, 15%. I think you can just buy cheap and sell on a fair value. It is the best strategy from my point of view again. Next we have Microsoft, and definitely Microsoft is a buy right now, because you will see that we have significant upside, and I already bought it somewhere here, like 380 or something like this. Anyway, I think it is definitely a buy, because we have upside something like 30% in a year. If you will buy just right now and wait for a year, and everything will come back again to median prices, you will generate 39% in 1 year, and it is definitely awesome. I actually bought it a little bit earlier, because you can make some discounts for for big companies because they can actually live with their mods. And also, if we will think again about this hype that every good programmer can wipe code anything in a matter of days, I think it is a bullshit because you already have like OpenOffice instead of Excel and Word. But people just don't use it. From the other side, we can see that European Union want to reduce their operations with Microsoft Office. Maybe they will lose some growth rate in the future. But again, it is hard to not to use Office in 2026. And I think everything will be okay with Microsoft. That is why I actually bought it and hold it. I don't know. Can we see something interesting on Guru Focus? Modestly undervalued, and I'm like 100% sure that it is undervalued. Future when you grow 16%, not really a huge amount, but with 16% and net margin of 39%, it is awesome. Definitely awesome. We have price training 24 for price training 20 and price to sales 9. And if we will just watch this image again, we can see that with price to sales 9, it is close to cheap price for this type of company. And I will just write Microsoft, check again, like right now. 360, I think it was a trigger for me. I will write the same. Then we have Amazon. Actually, I think that if you will buy Amazon right now, you will not generate over 20% on the long run, because I think it will be really hard for them to grow fast, and you can see that you can just get wrong numbers if you will straight use price to earnings 55. You have to adjust it maybe to like 30, maybe 40. We'll see it in a second, like 30. Okay. But again, they are working on a space thing, and they already have some satellites. That is why I think it is possible for them to grow fast with the same numbers, like over 10% per year, and it is a huge amount of money that they generate. They don't have competition on American market. That is why we can see that after a letter from CEO, we have this huge growth for 17%. I think you can just buy and hold it and grow with the company. but it will be not really a fast grow, and in theory you can buy top companies for a long term, just for lulz. But again, from my point of view, it will be better to buy it with some discount. That is why Amazon will be with like check again price 180 or something like this. And if we will like draw this line in this direction, you will see that this check again price will move forward. That is why you have to come back to good companies maybe every quarter. Broadcom, and I think Broadcom will be not really good for this model because, or maybe good, I don't know. We can check it really fast. Net income average 55. I don't like what I see, and it is quite hard to predict how they will grow their revenue in the future. Global technology company which designs, develops and supplies semiconductors and infrastructure software solutions. Again, a lot of money coming to semiconductors industry, and I think it is just the same like with NVDA, and you have to do your own research to think about Broadcom if you need it. I'm just passing it because I think it is not a good price. And I think if we will open Guru Focus, we'll see something like overvalued. Just because how they analyze companies. Yeah, significantly overvalued. But the growth rate that analysts estimate absolutely insane, 47%. From $100 billion in revenue to $200 billion, they actually double their production in 3 years. I think that you can lose your money fast in Broadcom, and that is why I will just pass it. Not interesting for me. Maybe it will be interesting for you, but I just pass it and don't think about this hype because it was actually interesting to buy it with cheap valuation and think about it again. If it was possible to buy it with price to sales 12, and now you're just buying with 26 price to sales. It will be really hard to make some money here because this valuation will be okay only after 3 years of significant growth. Meta. Meta. Not really good in meta analysis because I think that people actually going to be I don't know how to say it in English properly, but I think that in the future we will see a lot of stupid people, and they will do stupid things. They will watch YouTube, not channels like this one. I think some stupid AI content that generated with huge amount of Microsoft servers. Again, we can see that with these numbers like price to sales 6.6 and price to earnings 21, you were able actually to buy it with a cheap price. Here when Zuckerberg tried to do metaverse stuff, and now it is just on a fair price value, like plus minus 10%. It is nothing for our long-term investors. And actually we have really good numbers. They're growing. Net income over 30%. I think it is awesome stock, and I was thinking to buy it somewhere here on 520 mark, because I think with huge amount of bad soft produced with AI and vibe coding, definitely you will need some place to advertise your new soft. That is why maybe meta platforms revenue will grow a little bit faster, maybe faster than 23%. That is why we can adjust this normal valuation to a little bit higher numbers. That is why I was thinking about it, but I just bought Microsoft instead of Meta. And what do you think about this stream? Write down your thoughts in the comment section, because it is really interesting for me. This format, it is a little bit easier to do because I just have to press one button, and no, I just don't want to edit anything. Future revenue grow by analyst 19%. I think it is possible. Future EPS growth rate a little bit like the same, 18%. And if you will just buy right now, I think it is normal prediction for 2027, somewhere like close to 900 bucks. Not not really. Maybe they are right, and you will make it, but definitely it will be better if you were able to buy it for 520, because upside were a little bit better, like 70%. Again, you can research it, and if you like it, I wouldn't be like, no, I don't believe in Meta, I think Meta awesome, and maybe it will be just a safe bet for you. But again, if we will just use price to earning ratio, median price to earning 28, and now we have like the same price. Definitely it is better to buy with discount like 20 and sell it on a 28 or 30 or maybe 35. You can see it here, but I don't think that If you will buy it right now, you will make some good compound annual growth rate because it will be like maybe 20% or something like this. I don't want to talk about Tesla because this robo hype, taxi hype, it is just bullshit. And if we'll talk about it right now, we have companies that actually fall in revenue from 97 to 94 billion dollars year to year, and we have only 4% net income. I don't want to hold something like negative growth rate by revenue and 4% net income. It is just not for me. And actually, I research a lot of Hong Kong companies and China companies, and they have over 100 working companies that actually can produce humanoid robots, and I think they will beat Tesla easily. Crazy valuations, price to earnings right now 362. I think that is no, it is not a mistake. It is crazy for analysis. I think that it is not possible for me to buy Tesla, and if you know the whole story somewhere here, why actually they grow to 350, you will pass this stock too. Berkshire Hathaway, BRK. You can see it on the 6, but BRK. It is a .B here on the trading view. 1.46, 7, and negative. Definitely we have some problems with earnings because of 2022, and it is definitely not my company because you can see this decline in revenue from April of 2024. I don't think that you have to buy something that is not growing. Definitely a pass for me. I will just buy something else, not a Berkshire. Next we have Walmart, and you can already see that I really don't think that it is a good idea to buy Walmart because everybody who bought it from 2018 to 2024 actually bought it with thoughts like, okay, it is not a really fast stock, but I will make like 10% here, and it will be safe, maybe a little bit more. But after 100% growth, 130% growth, definitely people would sell it. And I think sellers can be really fast, and you can see that margin level like 2%, and they grow to 3%. Even if they will grow to 4%, it is just not interesting for me. I think that after this huge growth in valuation, we will definitely see something like minus 30% or something like this. But maybe I just don't know something, and we will check it on Guru Focus. What actually analysts think about Walmart stock. And you can see that analysts predict 4% revenue growth rate. Actually, if you think that 4% is okay, you can buy it, but I think it is not okay, and it is just not interesting for me to buy something that costs 125 bucks, and they actually produce only will produce 3.6 bucks in 2029. It is not interesting. Anyway, I think it is. If you hold it, I think that you need to think about sell it, and if you're not holding it, you're a good guy. I predict a drawdown, and it will be huge. And definitely I don't see any upside. This price can just stay in this area from 2026 to maybe 2030, and it will be absolutely okay for the stock. I don't actually understand why people think that it is a good investment for them. Then we have again awesome company Eli Lilly, company with ticker LLY. And actually I have some notes here that in 2023 it was approved from FDA for the main drug to weight loss, and that is why we can see here not actually huge performance, just 100%, but this 100% are totally legged, because they started to generate good money, and grow rate for 1 year 42%. I think it is awesome. If you think that they can grow for the next years, definitely you can see that with price training 60 they have upside, and it is awesome when you double up your revenue from $34 billion to $65 billion in 2 years. I just like this style of stocks, and it is interesting, but I think they definitely have some competition in this niche, but you can see that analysts who actually can predict something, they think that they will grow for 17, close to 18% in a year, and if everything will be okay with this stock, you can see that maybe it is not a bad time to buy it. Yeah. Definitely you need to do your own research, but if they will grow with the same speed, you can make some money here. Yeah. For me, I think it is a little bit hard to predict, and maybe the competition will be better, or something will happen with the drug. But with these numbers, it can be really nice grow maybe for another 3 years. It is okay to buy with a fair value. You will definitely have some grow in the next years. I will just make a note that it is not cheap, but can be awesome. Next one, JP Morgan Chase, so ticker GPM. And we have 47 minutes for just 12 stocks. I think it is not a really good speed of stock analysis. Anyway, JP Morgan Chase, you can see a revenue, but I think revenue can be tricky for banks. I think it is better to value banks for price to earnings, and you can see that price to earnings, it is a red line. It is a little bit lower because average price to earnings 11, now we have 14.7. And I think it is all you need to know about this bank. If you want to, we can check JPM on Guru Focus, and I think we can just check price to book ratio. For like 10 years, and you can see that median price to books was 1.57 and now it is 2.5. I think it is definitely a sign that you don't have to buy it, and I will definitely follow this advice. It is absolutely insane variation for JP Morgan, like 30% away from normal price, but it is bank, they have some like cyclical thing. Maybe if they will draw down to 220, I will rethink about it. That is why I will just write it to my file 220. Next one, ExxonMobil Corp, and because of Iran, we can just pass it because definitely it was a good time to buy it somewhere here. before the war and sell it somewhere here, you were able to make like 40% in a matter of months, and it was a really good trade. But anyway, if we're checking it, I can do it really fast. First of all, last several years, as you can see here, like from 2024, for 600 days, the revenue were in trouble. They were in it was in a stagnation period. Anyway, it was not really interesting. Now, and we actually don't see it, their income will jump from here to somewhere here to maybe like double, or maybe a little bit lower for several months, and that is why we can see this spike. But anyway, it is not my sector, and I prefer to invest in oil stocks through Russian companies, because they're cheap and it is easier to predict something. ExxonMobil is okay, but we will pass it. Then we have Visa. Visa. I really like Visa, and actually this way to invest were predicted by Visa, and I think how I can do something like this, because in I think it was something like here, they grow from 10 bucks to like 125. It is 10x in 10 years. And actually, to do it, you have to grow your portfolio with only 26% per year, and that is why I like Visa, because when I was younger, I just make this strategy, and I follow it for years, and it is working. My CAGR over 50% per year, and actually you can see that sales, gross profit, earnings actually super close to the actual price of this company, and you can see that it was a good time to buy it with a 30% discount. Now we have 22% more for Visa to draw down, and I think we can just add some percents, and I will write to my file like Visa 260, and I will just come back to Visa in I hope some months or something like this, because actually it is interesting, but also maybe in some nearest future we will see how they will just fail, and they will go to lower numbers, but right now they don't have any problems. You can see that how they grow, and margin close to 50%. It is definitely awesome. That is why you can buy it with these valuations, and in theory right now you can make like 50%, 15% per year with this valuation, but 15% it is not really huge for me. Johnson and Johnson. Actually, it is interesting because price to earnings reflect the price, and you can see this jump in earnings, and also you can see it here. In 2024, it was net income of $14 billion. In 2025, it was 26.8. And it is definitely interesting. You have to research it by yourself, and if it is not a one-time spin-off or something like this in Johnson & Johnson, it will be a really good idea to buy it for maybe, or you can just draw a 20 to 30% discount, maybe it will be 190. I really don't think that it is a good idea to buy it here, because you will just make not really a huge amount of money on the long run. And now we have only 4 stocks, and I will shut down the stream. And if you like it, you can subscribe, and I think I will research a huge amount of American companies, because I invest in it and I like them. Micron Technology, MU 14. Again, we have this DRAM shortage, and that is why all semiconductors companies just blow out. And actually, I have a really interesting story about my friends who just bought a SanDisk a little bit over a year ago, I think, and they made like 12x on SanDisk, and it was awesome. Right now in MU we have the same problem as always, that analysts predict a huge amount of revenue and net income. That is why it is okay valuation for right now, but I don't think that it is a sustainable growth for the next 3 years. I think that something will happen, and we wouldn't see this unpredictable growth in semiconductors. That is why I'm just passing it, and I'm just not feeling okay to invest on these valuations, because I spent like 20 years on the stock market, and I already saw something like this. It is just crazy. Oracle Corporation, and it is interesting because if we will just draw these average numbers, price to sales 6.45, price to earnings 30, and you can see that they grow for over 150%, and now they draw down to normal valuations. maybe it is a good idea to buy them, because you can see that everything is okay, and actually we have better net income. What I really want to check, it is free cash flow, and you can see that free cash flow in the negative zone. It is minus $25 billion. Maybe that is why they are not feeling okay. And I think it will be interesting to check it on a Guru Focus. Again, we have this vertical growth in valuation because of this future revenue grow 31%. Previously it was just 10%. Next years will be definitely better. But also you can see cash and debt. In 2018 it was like $67 billion in cash and 60 in debt, and now we have $11 billion in debt and in cash, and 10 times more in debt. Not interesting. ROIC minus WACC minus 2%. And the banking negative buyback. If you see something like this and they are just burning money, making a lot of debt, it looks not normal for me. They just burn my money as an investor and trying to reach something like this. But if I think companies can fail on this trip, definitely I will save my money. But if you like 100% sure that everything will be okay, you can think about to buy it, because definitely it will be better if everything will be okay in this AI niche. I think it will be better to buy Oracle instead of Micron on a like 10 years horizon. Okay, next one is MasterCard. And I think drawdown in MasterCard were a little bit bigger than in Visa. We can see that net margin of 45%, a little bit higher than 10% growth rate. And I think we can just check here with price to earning valuation. You can see that median 37, for 10 years it is 37 too, and it was a really nice strategy to buy here on a COVID with 26 and then sell it for 56 and again for 28 and sell it for 40. Maybe we're on a good numbers right now. It is 31, and we can check MasterCard on a trading view. Maybe it will be it is all the same numbers, but I just prefer it here because I like it. Average net income or price to earnings, how you prefer it. Actually, earnings reflect and revenue or sales reflect with the stock price, and it was a really nice opportunity to buy it here, maybe here. It were not actually really to buy it here because you need a bigger drawdown, and it was not on my screener here and here, but it is on my screener here because I actually bought Microsoft with this maybe 10% step away from a buy zone, and now we're super close. I think if I will see something like 480, I will buy MasterCard. Oh, yeah. Definitely I will make a better research, not like this one, because maybe something bad can happen with the business, and you definitely need to make your own research before you buy any stock. Don't listen for some bloggers, but it looks like everything will be quite the same, maybe a little bit better, and if right now we have 511 and in a year we will see like 695. You can calculate that it is like 36%, and it is awesome from my point of view. I will definitely watch for MasterCard, and I am super close to buy it because it is awesome, huge company. I will definitely research it, and you have to push the like button because you can see actually it is not an investment idea, it is just my opinion, but anyway you can see like MasterCard, Microsoft in one video. I think it is awesome. And the last one by market capitalization 2020s Netflix. First of all, we will it will be some problems with the model because in 2022 it was 14% margin company, and now it is 24, like 10% difference in 4 years. Definitely it is good because we make a lot of money in this company. And also I can see that price to earnings average 48. I think it is a little bit huge number for grow rate 20% and margin 24%. If we will come back to this table, we are somewhere here. I think price to sales like 9 and price to earnings 30. Will be okay. I will just adjust price to earning from 48 maybe to 35. I will just add 5 for a name Netflix. It sounds good for me. And if we are watching on this chart, I think after these 20 companies, you understand that now we are on a fair price or maybe a little bit higher. And I don't think that with a huge amount of options to make really cool ideas with AI, and it is quite close to films, I think Netflix can be disrupted easily. Or maybe they will just make a lot of money with integration for this whole AI things like Link or other companies. I will just wait with Netflix. Maybe I will come back to it after 65, but again, in this niche you can expect everything, and I think Netflix is a not really good company to buy. Or maybe I'm wrong. It doesn't matter for anyone. Again, thank you for watching. Subscribe and see you later. Bye bye. And I don't know how to turn off the translation.